An index fund is a type of mutual fund or exchange-traded fund (ETF) that aims to track the performance of a specific financial market index, such as the S&P 500 or the Dow Jones Industrial Average. Index funds hold a portfolio of securities that closely mirror the composition and weighting of the underlying index they track. The primary objective of an index fund is to provide investors with broad exposure to a specific market at a low cost. Index funds are typically passively managed, meaning they don't rely on the investment manager's expertise to select individual securities. Instead, they use a buy and hold strategy, which means they aim to match the returns of the index they track over the long term by investing in the same stocks, bonds, or other assets that make up the index. Index funds are often recommended as a simple and effective way for individual investors to achieve diversification and long-term growth in their portfolios, as they offer low fees, low turnover, and low taxes compared to actively managed funds. Here are some examples of index funds. Vanguard 500 Index Fund thinks this fund tracks the S&P 500 index, which is composed of the 500 largest publicly traded companies in the United States. iShares Core S&P Total U.S. Stock Market ETF, ITOT. This ETF seeks to track the performance of the S&P Total Market Index, which includes over 3,500 stocks of companies of various sizes in the U.S. Fidelity Total Market Index Fund, FSKX. This fund tracks the Dow Jones U.S. Total Stock Market Index, which includes the largest 3,000 U.S. stocks. Schwab U.S. Large Cap ETF, SCHX. This ETF tracks the Dow Jones U.S. Large Cap Total Stock Market Index, which includes the top 750 U.S. stocks. Vanguard Total International Stock Index Fund, VTIAX. This fund tracks the FTSE Global All Cap X U.S. Index, which includes over 7,000 stocks of companies from outside the U.S.